When a CEO quietly buys $1 million of their own stock, that's a signal worth paying attention to. When the CFO, 2 board members, and 3 VPs all sell at the same time, that's a different kind of signal entirely. Insiders can sell for almost any reason, but they only buy for one. They think the stock is going up. Today I'm showing you how to use AI to read those signals before they show up in the price. Welcome to the AI portfolio. I'm showing everyday investors how to use AI tools like ChatGPT and Claude to research smarter and make better decisions. Quick disclaimer, this channel is for educational purposes only. Nothing here is financial advice. I'm not a financial advisor, and you should always do your own research before making any investment decisions. Now, let's get into it. Corporate insiders, executives, directors, and major shareholders are required by law to disclose whenever they buy or sell shares in their own company. Those disclosures are filed with the SEC on Form 4, usually within 2 business days. This creates a public, time-stamped record of what the people who know the most about a business are actually doing with their money. Not what they're saying on earnings calls, what they're doing in the market. Academic research consistently shows that insider buying is a statistically significant predictor of positive returns, particularly when multiple insiders buy together. Insider selling is a much noisier signal, but in certain patterns it tells you something too. AI makes it fast to pull that data and surface the patterns that actually matter. There are 5 insider activity patterns that consistently carry signal. First, cluster buying. When 3 or more insiders buy within the same 30-day window, the conviction is high. A single buyer is interesting. A cluster is notable. Second, open market purchases. These are buys at market prices, not option exercises. Real money going in on the open market means real conviction. Third, large transactions relative to compensation. AVP buying $50,000 of stock on a $200,000 salary is different from that same purchase by a CEO making $10 million. Fourth, buying after a price decline. Insiders stepping in after a sell-off is a classic bottom signal. Fifth, selling before disappointing news. This pattern is worth tracking and flagging when it repeats. The first prompt maps out the recent insider buying picture for any stock. Use this. Analyze the most recent 12 months of insider transaction data for company name. Focus on open market purchases made by directors, officers, or major shareholders. How many distinct insiders have purchased shares? What is the total dollar amount of those purchases? Is there any clustering? Multiple insiders buying within the same 30-day window? How does the volume and frequency compare to the prior 2 years? Flag any patterns that suggest elevated insider conviction. This tells you whether insiders are simply exercising options and selling, or actively buying more of what they already own. The second prompt puts insider selling in context, because most selling is meaningless, but some isn't. Prompt: for company name, review insider selling activity over the past 12 months. What percentage of insider holdings have been sold? Are the sales part of a pre-scheduled 10b5-1 trading plan, or are they discretionary? Is there any clustering of sales among multiple insiders? Have any insiders sold more than 30% of their position in a single transaction? Compare the selling activity to the prior 2 years and flag any patterns that seem elevated or out of character for this company. Rule-based selling under a 10b5-1 plan is routine. Large discretionary sales from multiple insiders at the same time are not. The third prompt examines timing. whether insider transactions have historically coincided with meaningful stock moves. Use this. For company name, analyze the historical relationship between insider transactions and subsequent stock price performance in the 30 and 90 days following significant insider buying events. Over the past 3 years, how did the stock perform relative to its sector? Were there any instances where insider purchases preceded earnings, beats, or major positive announcements? Conversely, were there insider sales within 90 days before a significant decline or negative announcement? I'm looking to understand whether this company's insider activity has historically been predictive. This turns historical data into a signal calibration for the specific stock you're analyzing. Here's how to build this into your standard research process. Before buying any stock, run prompt 1 to map the recent buying picture. If you see cluster buying with open market purchases, that's a green flag worth noting. Not a buy signal by itself, but validations that the people who know the most are aligned with you. Run prompt 2 to check the selling picture. A company with heavy buying and minimal selling is a very different setup from one where insiders are buying modestly but selling aggressively. Then use prompt 3 to calibrate how predictive this company's insider activity has historically been. Some companies' insiders are consistently right, others aren't. Context is everything. Use these prompts to understand, not to act on autopilot. A few mistakes to avoid when reading insider data. Don't treat all insider selling as a warning. Most insiders sell for the same reasons everyone else does: diversification, taxes, liquidity needs, estate planning. Routine sales on pre-scheduled 10b5-1 plans are almost always irrelevant. Don't ignore position size. An insider who owns 10 million shares selling 50,000 is barely a rounding error. An insider selling 40% of their entire position is a different conversation. Don't look at a single transaction. The pattern matters more than any individual data point. And don't conflate correlation with causation. Insider buying is a supportive signal, not a guarantee. Even the best informed insiders are wrong sometimes. Use this data to sharpen conviction, not to replace your fundamental work. Here's your homework. Pick any company you currently own. Pull up SEC Edgar and look at the Form 4 filings from the last 12 months. Then run all 3 prompts and ask yourself, are the insiders buying or selling? Is there any clustering? Has this activity been predictive in the past? You don't need to change anything about your position based on this. The goal is simply to see whether the people inside the business share your view. Subscribe for a new episode every Monday and Thursday. See you next time.